Balanco is our market master of the day. He's global technical analyst at CLSA. He's joining us now to take some questions. Laurence, great to have you with us here in the program as always. Thanks very much for your time. We've cruised along very nicely to higher highs, newer highs. Election result, which was a little surprise, did not matter. I mean, mattered for a day exactly, and then the market made fresh highs. What's your sense, Laurence? How are we set up?
Yeah, well, we're not really seeing any major signs of weakness developing. And, the key thing that we've been observing through the month of July so far is the larger cap names are starting to make a comeback, particularly versus the mid-cap space. Even if you look at it versus the Bombay 200 index, is that we haven't made new relative lows. So the Nifty's actually managed to make higher lows through the month of July relative to its June lows. So we've seen some rotation into the larger cap names, and we've seen some hesitation in the mid-cap space. So that's probably the most noticeable observation, that there has been some churning beneath the surface. But as far as the Nifty itself goes, the uptrend is still there post that volatility around the elections. And then the 20 days providing us with key support on pullbacks and the short pullbacks that we've had since the recovery of the election lows. And that currently sits at the 24,157 area.
Okay. Well, Laurence, hi, good morning, and thanks for joining in. This is really an interesting time that we are in the market. Almost every asset class is seeing new highs. I mean, as we speak, gold is smashing record highs. You have the Dow, which is sitting at fresh milestones. The Indian markets are sitting at new highs. Agreed, this is a liquidity-driven market. But at this point in time, which is the asset class that looks like, at least on the charts, it could outperform for the rest of the year?
Well, I think one thing, if we start with the macro markets, the breakout that we've seen this week is gold just reasserting the breakout that you saw in February when it came out of the 2020 to 2024 trading range. And that's actually elevated our upside target from 2,550 to 2,625. So I think that's an asset class on the precious metal side that should continue to trend into year end. And we've got at least 26.25 as an upside target. And then if we look beneath the surface, you've got fresh breakouts in the S&P equally weighted index, which had been range bound basically from February. So you've got fresh breakouts there. And then if I look across the region, something that we highlighted at the start of this month is that the Asia-Pac banking index has broken out. And recently this week, we've seen US banks break out of their trading range. So while the IT space, AI, has got a lot of attention, we're actually getting strong trending behavior across the regional banking space.
Okay, all right. Hi, Laurence. Good morning, and good to see you. And as always, what about HDFC Bank? It gave that feeling that it's going to be going for the breakout, I think past that 1,720 odd mark, but it quickly pulled back. What's the view? Because that's the largest constituent on the Nifty. And that's been an underperformer yet again over the last 10 sessions or so.
Yeah, the pullback has been a bit disappointing, but what I would flag is that we're still sitting above the 50-day and the 200-day. And the other point is the attempted breakout that we saw at the start of July, end of June. We did see momentum confirm those highs. So I think as long as we can stay above the 50-day, we should see the stock attempt to re-break that 1725 to 1730 area. And breaking above that, we do look at targets then up towards the 23 to 2400 area. That is also one of the largest weightings within the Asia-Pac banking index. And I think it would be a big driver of taking that index higher. So it is something that we'll definitely keep on the watch list as a buy candidate on a breakout of that trading range.
Laurence, IT services stocks, what's your sense of their Infosys will report today? We've had TCS, LTI, Mindtree, etc., which have already reported. How is this sector looking?
Yeah, it's quite interesting. I mean, part of the US has been this rotation into laggards. In the India market, sort of beneath the surface, we have seen some rotation and in absolute terms, at least bounces in the likes of Unilever in the fast-moving consumer goods side, but then also Tata Consulting and Infosys on the IT services side. But if you take a step back and you look at the index price action relative to the Nifty, both those sectors remain below falling 200-day moving averages. So, at best, these sectors are mean reversion trades to their 200-day moving averages rather than becoming new leadership. So we think a positioning correction from the underweight positions, but we're not seeing new credentials as leadership candidates, both in the IT sector or the fast-moving consumer goods sector.
What about some of these, spaces which are now in the news, right, for the right reasons? Telecom, for example. We are seeing tariff hikes come after a very long time. Stocks like Bharti, Reliance have been doing very well. Do you see more upsides here, technically?
Yeah, I mean, Reliance would be our preferred pick, not because we see anything bearish on the Bharti Airtel chart. It's just that the breakout that we saw in Reliance earlier this year in February, that ended a 2.5-year consolidation pattern. And we're still looking at upside targets between 3,500 and 3,600 rupee at the end of the day. So new money into that space, Reliance would be the top pick there. I'd like to say nothing wrong with the trending behavior that you've seen Bharti Airtel. Just technically, we don't have any fresh upside targets for the name.
All right, Laurence, I wanted your view on Brent crude. We had a fundamental view yesterday from Chris Wood, who said that if Trump comes back, in all probability, the dollar index could come under some pressure. And he's been pushing the drill, baby, drill more. So because of that, we'll have high amount of crude that will be available. If that's the case, the fundamental view is Brent slides from here on, but it's still holding at around $85 per barrel. How do you see that one panning out?
Yeah, unfortunately, there's essentially a flat line price action in Brent. And what I mean by that, over the past 12 months, we've seen Brent oscillate between the $80 support area and up to the $98 to $100 resistance zone. And it's very much been a trading range, and we're sitting roughly at that midpoint of the range. So we're not seeing any directional trade or any imminent breakout from that trading range. So quite a stable, neutral trading range setup is how we see Brent trading into year-end.
Any of the other sort of relevant global markers? I mean, last night you had the dollar JPY, which saw a big crack, about 1.5%. Anything else which is sort of relevant as a marker for global risk appetite?
Well, I mean, I think we have to talk about that yen move, because what we did see was a break below the 50-day moving average. And that's the first time we've seen the yen break below that 50-day moving average year to date. So it does highlight a change in characteristics for the yen's trend. The other point that I'd make about the yen, if you look at speculator positioning in yen futures, the position had been net short at over 52% of total open interest. That is a crowded net short position. And the fact that we've now broken that trending behavior of the 50-day, we can see the yen strengthen back towards the 150, 190 to 152 area. Now, in the short term, that can cause further volatility, I think, in risk asset, as it has been sort of the funding currency of choice. So that's the risk, I think, from the yen move. But outside of that, on the macro side, gold's been the other big standout, the breakout of its trading range. And then, don't forget the crypto side, where Bitcoin has managed to hold the 56 to 58,000 area. It remains in a higher trading range, and that still sets for a platform, we believe, for a continuation of the crypto's uptrend.
So all in all, it's looking risk on. I mean, the markers are more on the upside, right? Indicating that there will be,
I mean, going back to where we started, I don't see anything negative on the Nifty chart as far as the trend goes. We are seeing some churning beneath the surface. And then if we go to the US side, we've got those fresh breakouts in indices like the Russell 2000, the Dow Jones, as well as the equally weighted S&P. So technically, we don't have any major warning signals of topping price action, and this rotation into laggards has actually improved some of the issues that we had with breadth readings just over a month ago.
Okay. I just wanted to end with one view on the Nifty itself. I know we've spoken about it, but just wanted to understand what the floor of the market could be if and when a correction does come. What's the maximum? Do you think we're looking at a 10% correction, 5%? What is the floor and the ceiling for the market now for this year?
Yeah, so basically, if you look at what would be our worst case scenario is a pullback towards the 21,788 area. That's roughly where the 200-day sits with the lows that you made around the Indian election results. And that was also coinciding with the lows that you made in April and May. So that's around the 21,700 to 21,800 area. We don't have a very short-term upside target because of this trending behavior. We've met all the targets that we were looking at. We had 24,300 as our initial target, but we've still got our longer-term target at over 37,700 for the Nifty, on its uptrend from the COVID lows. So that's where our longer-term projection is for the current trend, and pullbacks we think found good support around the 21,700 to 21,800 area.
Okay, all right. Laurence, thanks a lot for joining in. So that is the word coming in on the Nifty. But let's